Everybody, it's Wednesday, January 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime into anything we're discussing today, please feel free to drop us a note in the chat area, and we'll address that during the show. Real quickly here, overnight markets had March corn down 2 at 457.25. March soybeans down 6.5 at 12.42, and March Chicago wheat was down 1/4 at 609.75. We had CONAB out this morning with some Brazilian estimates. They had pegged soybean production at 155.3 million tons, off from their previous estimate of 162. And for corn, they were at 117.6, which was down close to 11% from their previous estimate. Going to jump right in here this morning, guys. Plenty to talk about. We were running some numbers, relative to the drawdown we saw in yield from trendline for the U.S. For soybeans, and then comparing that in what we're seeing over in Brazil. So throw it over to Dustin to start off this morning, and we'll see you. How's it going, Dustin?
Good morning, Dan. Yeah, so I think I'd imagine that the market was probably expecting something lower from CONAB this morning. Obviously, we've had at least 2 months of a lot of social media posts of fields that are burnt up or being switched to cotton because of the drought. Then we've got these late rains, so they're looking at about a 5% drawdown on production from what the USDA had been projecting to start at 163 million metric tons, and it's still a monster crop. If that's what we end up getting from them, it's a pretty big size world resupply number. And so I think there's probably a little bit of wind out of the sails from people that are looking at this number, and we're hoping for something much, much lower coming into the day. But yeah, if you compare that to our own estimates for, we're still going to figure this out for the U.S. on Friday once we finalize stocks counts to back into our own soybean yield. But right now, the current WASDE numbers are about 5% below trend for yield in the U.S. And so you could say that it's kind of a similar estimate for just a production drawdown, but there's plenty of South American acres this year.
That's good. And I think Justin made a couple points this morning too. I think it's just the difference in when those rains have hit relative to the U.S. versus Brazil, right, Justin?
Yeah, I mean, my only observation would be that, here in the U.S., we were fantastic and a lot of areas dried out during pod fill. I know on our farm specifically, like it didn't rain the last 6 weeks, right? So it took still really good crop, but it took, what could have been a kind of a blowout record type yield down. So they, on the other hand, have been getting rains when it mattered. I think that's why the bean market's broken $1.85 since mid-November, right? The market figures it out before we have to have a government agency write it down for us. So I think it's a little bit different, similar in yield drawdown, but, they started off horrible. We put a bunch of premium in the market and then it started to rain. So I think it's probably a little different as far as like where we end up. Their yields should continue to increase from whatever level they started at, right? So they got marked down first and then kept improving. Where ours, I think, were kind of bumpery type yields, especially in the Eastern Belt, and then we kind of shaved some bushels off at the end. So a little bit different how we get there. Might end up in the same spot.
Yeah, no, that's a good point. And, as we transition now, I mean, we were certainly going to look at this number here this morning, but we'll shift everything to Friday. In the much anticipated January report where, it kind of sums up the year, right? Puts a bow on it. It was interesting to see the average guesses for corn and bean yields unchanged, from an average guess perspective. Throwing it out there. I mean, does that set us up for something on Friday, potentially?
I think, you guys can add that. I mean, just quick, this report always does, right? Whether it's stocks or yield. I mean, it's kind of a report that's set up for a surprise. Same with the March 31st report. Those are the two biggest reports in June, I guess. So those big quarterly reports are kind of geared towards surprises. Same with Brazil. It's such a big, there's so many factors. Like for us to know what stocks are going to be is impossible. So we have to rely on the government to tell us what they were. And as Dustin's pointed out before, sometimes they even change that. So it's just a report meant for surprises. And a lot of times you make a higher or low going into these major reports, at least a temporary one, just because, here we are breaking hard into it. If it was a bearish number, it wouldn't surprise me that you make a low this week, and you've kind of factored that in. So,
yeah, I would say add to that, when we say they change stocks numbers, like specifically, we're thinking of the January 2021 WASD and quarterly stocks release. That was when they revised. Basically, they made a downward revision for the September 2020 stocks number, right after the fact. So they go a whole another quarter, and then they changed the ending year stocks number count. And when pressed on that, the USDA responded that they were trying to reconcile to their feed usage number, which that just kind of gives everyone a bit of a pause to question what the most of all the numbers that we should be able to trust. To Justin's point, is that we're not in the private market not able to go out and count stocks, survey growers, survey delivery points, see what's actually in the bin, and then reconcile that back to the yield. And that's the order that it should be going, right? We should be first coming to a December 1st stocks count and then backing into the yield. That's going to be way more accurate than trying to go out and do yield estimates through a survey.
Yeah, backing into what you counted and going the other way. Yeah.
Right. So that that was a big surprise in January 2021. It actually reconciled that, in our opinion, that the 2019 crop was smaller than what they had been reporting. Right. That the delayed planting did have a much bigger impact on final production in 2019. We didn't know that till January 2021 that year. So it was to say that this is a big report. Yeah, it's an understatement, because they have quite a bit of control over the market when they count this number and release it, because the market could be surprised by easily 300 million bushels for corn in a report like this.
Yeah, in the stocks, right?
On stocks, yeah.
Thoughts?
Yeah, I think Dutton, you were looking back. Not to cut you off, Dan. You were looking back. What year was it? Was it 2013? A slimmer type market coming off a big bull market where we had a huge break.
Yeah, it was coming out of 2013 into 14. If you remember, we had a big bear market coming out of so we had obviously 2012. Everyone remembers that year. 2013 is the first year prices started to collapse, right? And we felt, I think I was looking at the new crop contract for DESA 14 coming into the January 14 report, and big bullish surprise, after a big bear market in 13. And it actually set the stage up for a nice, orderly seasonal rally to sell into for the 2014 growing season. So anyone that took advantage of that rally coming out of that January 14 report, that was really what was needed to make the year for 2014 at that point. Because, of course, if you remember, 2014 was another big bear market year. By the time we finished 2014, harvest 2014, we were trading back levels we hadn't seen in quite a while. And, that looking just back on USDA data and anecdotal data, big year for equity destruction for growers when the pendulum finally came back down to mean reversion on price action. So anything we get out of this, if we do get a surprise, I think to your point, there can still be surprises, even though it's been the number has been pretty bearish up till now. Don't rule out a bullish surprise. I wouldn't necessarily expect it because of what we've seen from spreads in action, but it really depends on what the report says. That's why everyone focuses so much on it. Is that
well, and it's, even I'll even argue that 10 years later, today's date, the funds have become so much more volatile and will move on a dime. So if you've got 200,000 plus shorts sitting a certain way and there is a surprise, they don't wait around like they used to cover. They could cover rather quickly and have a bigger rally than people think, just because everyone's sitting one way. It feels like you finally have gotten a lot of farmers that had to move cash corn because for cash needs, like we talked about. Everyone's kind of given up a little, bearish, so you're kind of set for a surprise. Not that it'll happen, to your point, but you should be prepared of what a 30, 40, or 50 cent rally would mean to you. because it might not hang around long either. Like if we're down here, it's probably fundamentally for a good reason. So if you get these kind of supply shocks or number shocks on a big report like this, it might be short-lived just because people have to get out of a bad position.
Yes.
We talk about it a lot, Justin, but yeah, I mean, you'll see some weird, crazy spikes, right? You know, whether it's 2, 3, 4 minutes before the report and then post-report, you get some air in the market and things get going, swiping crazy. Probably not a bad idea. Throw some orders in if you have some wish orders for getting cash corn cleaned up, right? I mean, we know we've got a lot of it.
Yeah, and you know, options have gotten really cheap on this break, you know, by beating everything up. You know, so I think there's cheap ways to get some of those kind of coverage levels in place if you need it.
I just got a good question here, and I'm going to read this for you guys, and we can talk about it. Many farms have alternative revenue streams, and their overhead costs may be inflated to support those revenue streams. As we look forward to a tight or negative margin year, how do we reconcile this to get to a true cost of production for marketing purposes? It's a good question, Reed. Appreciate you reaching out.
Yeah, it's such a hard question. I think, yeah, it's a difficult. I'm gonna have to think about that one for a second because, you know, if we're talking cost and revenue in separate areas, a lot of times we have this question actually. Like if we're relying on, you know, just on a marketing year basis. And we're coming into the year with a negative cost of production, as we've been talking about in this and on the letters too, as well. University data suggests that expectations probably, you know, definitely need to be changed a little bit, you know, rather than maybe shooting for a, you know, 10% ROI, we might be shooting for break even as a, you know, just to get through the year without a major business change underway, right? If we come into the year with negative equity in the next year, you know, things need to be adjusting. You know, if we don't get at least to, you know, some sort of maximum loss floor set in place, if that's what we're going for, right? It's only January 10th, and so we are still usually of the belief that at some point during the year, the market's going to give us the chance for profitability within the calendar year. In 2014 already came up, right? That was one of those examples. It was a huge negative equity year for a lot of growers. However, we still had that look at positive prices sometime in that March to April window where we just had to be really on the ball and ready to maybe accept a little bit less than we have been the last 2-3 years for an ROI and set those plan B floors in place, you know, rather than plan A. You know, plan A would be our profitable cash sales. What we're all in the business of farming for is try to sell our grain at a profitable cash price. Plan B is that fallback plan of what happens if I don't get the opportunity? What's the maximum loss I'm willing to take, or what's that minimum gain I'm willing to lock in if I get that opportunity, just in case I don't get that really lofty cash sale that I want to get to.
Yeah, Dustin, just to add to that though, too, like if we're talking about true cost of production, it's what it takes to grow the crop, right? So if you have, you know, increased overhead because of other activities, you have to take those out of the equation and find out what it actually takes you to grow the crop. You know, I mean, I'm sure like when you have high prices, you know, people put on extra inputs. You're trying to get the biggest yield possible, right? Because you have high prices. When you get low prices, you have to figure out what areas you can cut on inputs and figure out what that true cost of production is to your question, Reed, I think, you know, and you know, if it's high rent, you know, if you're paying too much for rent, maybe that makes sense at $6 corn environment, but not a $4 corn environment, you know? So I think kind of resetting those expectations of what, you know, those kind of rent numbers don't make sense in this environment that may have made sense from 21 to 23, you know?
Yeah. And, you know, that is always a touchy subject, as everyone knows, because, you know, once the land's gone, it's hard to get back, right? Even if it is unprofitable. And a lot of times when we have that discussion, you know, it's like somehow a lot of times, you know, a big rent number is thrown out, and then we still end up getting, you know, a 250 yield on that ground, and it's profit. It would have, you know, been a very profitable number. So everyone's going to have their own risk tolerance of, what they're willing to and willing to not accept. I think it's the longer term rental agreements, right, that are a big concern. You get locked into something, and like if you just go look at a monthly chart of corn, beans, and wheat, or any of those three separate, it does look a bit unnerving when you think about how these things flow. If the pendulum truly is swinging back down to some sort of a mean reverted price where corn goes back into the lower fours for a while, and beans are down to $10, $11, obviously some of the agreements that have been made on a 2 or 3 year scale are going to be a big risk, right? They $500 rent in some of these high rent districts is probably going to be a losing proposition no matter what, if we get into that environment again. So,
well, Dustin, you also to look at, like, isn't it important to look at like what percentage of your, projected revenue is rent expense?
Yeah. Yes, it is. I mean, we always consider a fair rent to be about a third of total expenses, right? Or total revenue, rather. Third of total revenue is a fair rent. And that, you'll see that a lot of like flex rent agreements. But at the same time, you go back to these years like 2014 and even a little bit into 2015, is that those are the sticky numbers, because a lot of growers still have equity coming out at 12, right? And even 13. They have equity coming into those years. They're still willing to pay that high rent, even though prices don't justify it at that point. So,
right.
It's how much, of your own haircut do you want to take in those years just to keep that ground under your name? Because there's more than likely going to be another grower there ready to take that losing proposition in the hopes that, under the idea of recency bias, in my opinion. So there is a bit of a sticky lag there. And we're seeing that again in 24 right now, Justin, where a lot of rents did not come down, or a lot of landlords are even trying to increase them, just because there was an equity build last year, and they could afford to.
That's always the tricky part with these turns, right? I mean, every time you have these big inflation type numbers where costs go up, they're always stubborn, and I think everyone knows this, farmers especially. It's stubborn to go down; it never goes down as fast as it went up. Right. So that is always the hard part in these environments.
And everyone's got to take their own, risk tolerance of what they're going to do. But there is a good chance that some of those, bigger chunks of land at high rent are going to be at an equity loss, in those environments. So you got to take what you're willing to do in those.
Oh, very good. Well, it just came into the open here, fellas. We got March corn down 3 1/4, 456. March soybeans down 12.5, just off the low here at 1236. And March Chicago wheat about unchanged at 610 1/4. Good discussion here this morning, fellas. I know we'll continue to build into Friday's report. Tomorrow morning, we will have weekly export sales that will be out, so we'll take a look at those. Every day, as always, we're streaming live on X, Facebook Live, and YouTube Live every morning that the markets are open at 8:15 Central Standard Time. Appreciate everybody contributing here this morning, and thanks for the comments. And we look forward to seeing everybody tomorrow. Have a great day.
Thanks.
Thanks, Jim.
Thank you.